What's up, guys? Today was actually a very big day. I traded the FOMC meeting price action. This was on Wednesday, June 15th. And I didn't trade in the morning because usually before these big events, the market's just very choppy. So I waited until 2 o'clock until I was in front of my screen and ready to trade. And as you can see right here, the volume picks up right at 2 o'clock. So yeah, let's get right into it. So I took 4 trades this day with a profit of $3,800. And the first trade was actually me going short. So I had this 376 level plotted on the chart. And usually, right when the first move is usually not the right direction. So you usually want to wait a little bit, and then you take the direction of what happens right after the first candle. And so the low of here was 376.40, and I already had the level of 376. So I was like, all right, if this thing gets below that 376 area, I'm gonna go short. So at exactly 2:04, right when you saw the break below this, I entered short 2 contracts on this trade, shorting the S&P 500. Hoping it would basically go to this 374 area, 375 area. So right when we broke this, we had a quick move down like this. I wish I had the recording. I didn't have the recording because I forgot to record this day. I took my first contract off right away because this move happened so quick to the downside. And so I held through this kind of small pullback, and right when we broke this low and started accelerating lower, that's when I got out. So I think I got my second contract, I got out at 374.60 something. So the first trade was insane. I think I made around 1,500 on that first trade alone. And so this is where a red trade comes in. So over here, I had 2 contracts. I wanted to play the low a day break, this 374. So the low a day was 374. I entered a little. I'm gonna be honest, this was not the worst entry, but it was kind of extended going into this level. So when stocks are extended going into a support level, there's a higher probability that it actually just bounces off that level or just fakes people out and goes the other way, which is basically what a bounce is. And so I was kind of faked out here. When we broke that 374 level, I got in. I wasn't quick to get out. I took one of my contracts out at 373-ish, but this bounce kind of scared me out, so I took the second contract out. So I broke even basically on that trade. Didn't lose much on it. I think I actually made 100 or something. So that was that trade. The next trade was what went wrong here was I just kind of had this bias that we're gonna keep going lower, because I'm like, the Fed raised rates. There's negative sentiment in the market. I think we're gonna go lower. Sorry, excuse me. So I could not capitalize on this whole move up. I was just watching it go up and up and up, and I was just kind of waiting for it to pull back down, but that just never happened. And so right when we kept pushing higher and we pulled into this 380 level, that's where I bought in on this green candle. I was waiting for the break of the high of these 2 candles. I got in, thinking that this was just a small little pullback to EMAs and we continue higher the rest of the day. That did not happen. Right when we broke 380, we started accelerating. That's where I just cut my losses, and that in itself took me down to, I think, 700 on the day, which is whatever. So my last trade of the day, and this is the big one. It's big also because what went wrong here is I actually bought 3 contracts instead of my normal 2. So because I had this losing trade, I'm like, all right, let me make a little bit more back. So I'm gonna buy 3 contracts. And so all this consolidation was happening, and I was like, all right, if we can get back above this 380 level, I'm going to go in long. So when you first got this break, I bought in 1 contract. I didn't really like the price action, so I only got in 1 contract. And I was just holding through this consolidation. You might ask, why did this candle not scare me out? The reason it didn't really scare me out is because I know SPY does a lot of these fake outs where it'll be like a break of a trend, and then it'll just, push higher to fill that candle, just go higher. So this didn't really scare me out. My stop loss was kind of around this 378-ish level. But when this candle opened up, it dumped to that level and quickly was bought up by buyers. I saw the buyers here on the tape, so I was like, all right, this thing might be strong. So I actually bought more contracts on the break of this high. So I bought 2 more contracts here at 379.32. So now I'm in 3 contracts this trade. and basically we break above this 380, just kind of, and I'm just holding all these positions right now, and the chairman was talking right now, and so I was just holding these. ATR trailing stop. This is what I like to use as a kind of little resistance. So right when we broke 381, that's when I took my first contract off, and I basically let the other two run. And on every single move higher, that's when I took it off. So basically, the first one that I took off was above 381. Right when we broke right through, I took my first one off. Second one I took off when we broke this high and we went towards 381.85. That was my second contract. And the third contract I took off when we broke this 381.92, took it into 382.25-ish, 382.30-ish. So overall, really good day. This first trade put me above, really nice. And so cut my losses on these two trades, and the last one put me to that 3,800 profit level. So yeah, so thank you for watching. I'll see you guys in the next one.